September 14th, it's after the market closed. I want to update our S&P forecast. The last one was unusually accurate. We called for the 13th high up against that line that you see in the chart. And the price of that line was 41.75. The high price of the day before the market collapsed 250 handles was 41.75, so got lucky. But the reality is that a lot of people now are worried about a crash, and I don't think the market's going to crash. As a matter of fact, I think the market is retesting the June lows, and it's going to have another bounce before it's really ready to go down meaningfully. So the general idea is that the high of August 16th, that high is going to hold, okay? And so there's a swing down from the August 16th, and we're expecting the low point of the swing to be November 24th. So it's about 3 months. And in the middle, it's going to get choppy and wild as it's already started. The volatility in both directions, not just down. And the extreme decline yesterday was likely a one wave of a five wave of a sequence that has a two wave coming. Ergo, the likelihood is tomorrow, which is Thursday, we could see a decent rally. Market closed above support after testing and trying to break it but not breaking it. And the pattern is likely to have an up day into the 16th until Friday, and then another sharper down, finishing up the third, fourth, fifth of the five-wave decline that just started on the 13th. And that should be ending on Monday the 19th or possibly the 20th. There's also a Fed announcement next week. My bet is that between the 20th and the 30th of September will be another meaningful rally in the S&P, taking out the 4,200 level. And it is possible that we'll see the 3750 or even a little bit lower by Monday. We have two momentum oscillators that I'm using, both of which indicate at least 3850 and the other one says 3750. So there's a good chance that this decline, this fifth wave decline, will take out the 3870 and continue to 3750 area by Monday the 19th of September, followed by one more rally. That rally will not take out the August 16th high. It's an intermediate rally, and it's going to be followed by further decline in October and November, where the final low is probably November 24th, and potentially another retest around December 10, which would be when the 20.16-year cycle comes in. Price-wise, the support is around 3750, the resistance is 4250, and the major support level, if it's going to break down in November, it could break the 3600 area. The next significant level is 3420, although it just might break it and go to 3550 and then hold. So, but there's a good chance by November we'll see new lows for the year, that the market will probably not be particularly bullish until after the 10th or 15th of December, and then we expect a rally up into February of 2023, which could be meaningful. There's some force holding the market up. It is short-term cycles are sharply down, but then they hold, and then they rebound. There's some fairly significant force, there's some cycle underneath this market that doesn't want it to go down in a crashy type 40-50% lower move, which everybody's talking about. However, late next year, I think we will see significantly lower prices. The first quarter, possibly the first half of 2023, probably the market will hold up and possibly rally significantly to cause people to get out of their bearish mode of thinking, and then the market will fall. And I expect that the bear market will continue until the end of 2023 into 2024. Okay? So, if you like what we're doing, give us a thumbs up. If you haven't subscribed, subscribe. If you have friends who you know might be interested, let them know. And we want to expand this knowledge. I think we've been really, really accurate, and we want people to know it and help avoid losing money and make some money in this market, even though it goes down. Thanks a lot.